Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com with a Forex quick look. I'm going to take a look at the sterling versus US dollars. We head to the end of the trading week and look forward to next week's trading, so let's get started. Price action this week in the sterling versus US dollars largely up and down. We had about less than a 90 pip trading range actually for the week, which isn't a lot, folks. That is indicative of a market that's looking for a direction. It's looking for the next shove. It's looking for some sort of catalyst to push either higher or lower. We actually had retail sales come out of the UK today, which came in stronger or weaker than expected, and the initial move was to the downside. That move to the downside took the price below the lows for the week, and it looked like the sellers were going to take control and push to the downside on the last trading day of the week. But lo and behold, the market stalled right at the 126.73, sort of a random well, it wasn't a random level. I'll talk about it in just a second, but then started its rotation back to the upside. And the last three bars on the 4-hour chart is seeing a rotation to the upside. We are moving above this high price right now and looking toward the high price for the week, which came in at 127.60. If we get above that level, opens a door, and that door would then have traders looking toward this area up through here, where we had a number of different swing highs in play here. We also had a swing low here and a swing high here, which sort of define this area in my mind as a target area up to 127.93 to 128.02. Also right around the above and below the 128 level. So be aware of that on further momentum to the upside, not only today, but going forward. If we break above 128, then we'll have traders looking and thinking about going up to 128.93, the high price that we saw in the month of March. Now, I mentioned that this low price stalled at a level, a key technical level, and you have to go to the hourly chart to see what was in play. And if you go back to the hourly chart and you look at the green line right here, that represents the 200-hour moving average. We last traded below the 200-hour moving average back here around May 14th. So it's been trending to the upside away from that moving average. And this consolidation that we've seen in trading this week has allowed that moving average to catch up. But the first test of it in trading here today did find support buyers against that level. And it's been pretty much of a straight line to the upside here. Maybe a little correction at the start of the New York session with the price moving briefly below the 100-hour moving average here, but quickly rebounding back to the upside and restarting that move to the upside. So buyers are definitely taking more control. The question is, can they get outside of the trading range for the week and push to new highs for going back to a couple months for this currency pair? That's going to be what's going to be decided next week. What would hurt this, the more bullish bias, is if the price were to start to move back first below this swing area right through here, and then below the 100-hour moving average. Probably the 100-hour moving average would be certainly a disappointment for the buyers going forward. And then ultimately, if the price is going to go lower, we need to get below the 200-hour moving average, which again held support in trading here today. So overall, going into the new trading week, the buyers are more in control in the sterling versus US dollar. We have the defined risk, including the 100-hour moving average and the 200-hour moving average. As long as the price can remain above those levels, they remain in control. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.